Hong Kong's real estate market is set to break $3.8 trillion this year. Here to expand on this growth is Kathy Lee from Colliers. So, Kathy, what's been happening in Hong Kong's real estate scene that's affecting sales?
Yeah, I think Hong Kong has been experienced a number of challenges since the border reopened. A lot of them external factors like the high interest rate, the geographic tension of China with the Western countries, as well as the reduction in our total populations. That's actually affected the demand in general across different sectors, including retail, office, and obviously the high interest rate environment actually have dented the investment sentiments across different markets.
Which subsector of the real estate market is experiencing the most change right now?
I think actually all the sectors has affected by all different factors. First of all, for the Grade A office markets, we have seen a supply boom over the past 2 years. We have more than 4 million square feet of new office space coming into the market, while the demand remain relatively subdued. So actually driving the overall vacancy rates going up to historical high to over 16%, and then become a pressures on the rental value of the Grade A offices. On the retail side, I think the high street shops are slightly doing better than other asset classes, but the overall labor center shopping mall segment has been affected by the outbound traveling of Hong Kong residents, while the tourism arrivals hasn't been 100% recover to the pre-COVID levels. And then for the investment side, the high interest rates actually have affected the purchasing power of the investor, because the increase in their capital cost, in the cost of their capitals. And then most of the investors remain at a wait and see approach to see whether the interest rate will to go down in the second half of this year, and then delay their investment decisions.
Kathy, what are the best and worst investment options for locals and foreigners?
For both the local and foreign investors, Grade A office should be a good investment classes at the moment, because the capital value has already came down by nearly 40% before comparing to the pre-COVID levels. And then we have seen a lot of investment interest, particularly from the end user. So for those one who would like to have their own office space, this is a good time for them to have what we call bargain hunting, to find a good office space for their own use for occupations. And we believe the Grade A office leasing market will stabilize after 2026, when the supply boom become the supply pipeline become relatively slow, and then the overall demand will actually stabilize, will provide some support to the Grade A office rentals, and then that will benefit the further increase in the capital value of the Grade A office market.
Thank you once again for your time today, Kathy.
Thank you.
Again, that was Kathy Lee, Head of Research at Colliers Hong Kong. For more news, please visit hongkongbusiness.hk.